Alrighty, good morning, good afternoon, and good evening. It is Friday, TGIF. Let's see what it all looks like this morning. It was really interesting looking down at the bonds. The bonds, interest rates all of a sudden took another turn. It's always surprising. And you can see here, there's the, what is that? That's the Swiss franc. You see the Swiss franc against the dollar lifting up. There is the J4X version of it right there. And let's get our fact check spreadsheet up there. There is that. So we're rolling along 5 by 5. Cool. All right, now let's see if we can get this thing adjusted a little bit like so. I guess we can move it over until it has issues. Nice. I like that. Is that being visual? Let's see. We'll see what the other is showing. Looks like it's very clear. Excellent. And a little bit more. How about that? That's not too bad. I think you can still see the numbers. Double checking. Looks good. Yes, I still see everything. If anybody says it's off, let me know. All right, so you can see here. That is good. You can see that strength right here. Let's get that mouse going again. Let's see, where's Mr. Mouse? Right there. You see that right there? And the Swiss is moving up against the dollar. Maybe I need to use this right here like that. There we go. And you can see, it's off that 94 area, which was a very interesting little sell here with that sell signal with a daily and weekly. Oh, no, that's right. It was in a weekly buy. So it was take your profit from here from all that win and do nothing. Don't be long, even with that weekly uptrend. And now we are actually flirting with the weekly sell. Interesting. We're just underneath it. Let's make that a little bit wider. But you're going to see we're just underneath it. So let's see. It was trying to get into the weekly sell, and all of a sudden the dollar starts to lift up. And then let's jump over to the 30-year bond. I saw the 30-year bond making an interesting move here. There's copper for those watching copper. But look at the 30-year bond right there. Activate. Look at that. It's trying to get into the weekly buy, and in the next moment they're knocking it down. Now, I understand the Federal Reserve bought at one point, somewhere after the market closed, it bought a lot of bonds. It stepped up and bought a lot of bonds. This QE thing is so weird. George, you got it figured, eh? Doc and Robin, or Robin and Doc. Cool. Excellent. Yes, indeed. Oh, and Robin, 15 by 16. Sorry about that. I started running to get everything organized here for the let's see, hi, Biden, crimes committed with a gun. Okay, there we go. So that's the action we're starting to see, is that the interest rates all of a sudden heading down. This is, I get emails from some of the old heads. Remember, I was a kid when I was on the trading floor. I started off, I was young. A lot of these people down there, the vice chairs and head of committees and all like that were old. And so being involved in the markets for 40 some odd years, now I'm old. At least that's the way I think of it. And the emails I get from some of the old guys who are like in their 80s and 90s, they're like totally confused by this whole universe at this point. The whole idea that the Federal Reserve steps up every day and is deeply involved in the markets compared to the specialists and the funds. It's a blow your mind situation. There was a day when currencies traded just because there was demand in that country for the currencies, or vice versa. Now it's all central bank orientated, and it's so strange. It's kind of like that Wizard of Oz film. I don't know how many are listening and how many watch, but there was a movie called The Wizard of Oz with a woman named Judy Garland. Very old, famous film, first color film, I believe it was, in the world or in the United States, one or the other. And what happens is the wizard in this, who is supposedly able to answer all questions, one day she travels to find the wizard, and they pull the curtain back and realize he's just a history professor or something like that. And he's not a wizard at all. And he's just using, fake devices to make him look like he's this all grand wizard. And I get these emails, 2 in the morning, 5 in the morning, from all the old heads, and they're every so often, and they're like, how can they do this? And it's like, this is what they are. This is QE now. We're in the QE era, just because the financial media refuses to talk about it, and the financial community in general acts like it doesn't exist, and when it happens they go, oh, it just happened, it's okay, when in fact, when you're plowing in $260 billion between all the central banks, the ECB, the Federal Reserve, and Royal Bank of Canada, Royal Bank of Australia, and whoever else part of the the central bank system, is plowing in $260 billion into the market every month. Every month, $260 billion. I mean, $4 billion can move the stock market pretty decently on a given hour, but $260 billion. I mean, not counting when they're doing rollovers and bonds. I mean, it is. We are in the QE era, and it's hard for veterans of the markets to understand that, especially the old ones. The old ones really have a hard time with that, and they send me things, and I don't want to look at it. It's like, yeah, that's what it is. That's the reality now. And so, here you go. You look at this, and all of a sudden they just slam the 30-year bond. Bang. I mean, that's a pretty good move for the day. That's obviously you can see right here they had to do it again for some particular reason because it was rising, and interest rates were getting too cheap again. So they had to slam them. And it is a QE era. So it has an effect across all our currencies and our commodities. And it's just everything. Check. Check, check. So, excellent. So thank you, Robin. Yeah, it's like, it's the QE era. That's it. That's what it comes down to. And so we navigate the markets through quantitative easing, and me being a little hilarious and crazy at given times at the same moment, solely because I shake my head. Like yesterday, I was watching two people being interviewed, two different fund managers, and they are so far away from reality in their conversation. I was thinking they should be forced to do fair disclosure. In other words, the Securities Exchange Commission fair disclosure rule. They should say, we're talking about this being bullish, and we like this solely because we have 95% of our assets in the long side. They should say that every time they say something about the marketplace. I mean, honestly, they're talking their own book, and they're not even telling everybody that they're doing it. And they're pretending that quantitative easing and that $260 billion a month that's being plowed into the markets visually, we're seeing that. We can't even see what they do on rollovers, and the tail of the auctions. We can't see any of that. I mean, we see the tail, but I mean, we don't know who's doing all that buying or selling. And we know it's the central banks. They're holding these markets in a steady channel, a steady envelope, however you want to describe it, a range. That's the best way to describe it, and that's what we're seeing here. So that is the flavor we wake up to every morning. I was saying to someone last night about the idea I want to go to an open mic place and be the comedian, because this is all one large joke. I could sit here and make jokes about it all day long. It's crazy. All right, let's jump back over to the currencies, and we will take a look at the euro. There's the euro there. You can see it's doing the same thing as the dollar versus the Swiss franc. It's moving down. You can see that right there. But it is flirting with the weekly buy. It was through there. Now it's kind of backing off again. Let me see if we can change the color on that too. Right there. There we go. And so you can see that right there. It's flirting with it. Right now we have plot 1 in a minus. See that? 0.00031. And plot 4 is this? Let me see if it's running on a super style. Okay, so the invisible, the plot, the super 5, the 5 out of the gas line 3.5 is invisible, so we're not watching that on this particular product. That's related to the beta of this product and how it trades. In other words, the volatility. Speaking of which, I saw an article last night. They're talking about running the S&P equity options and the VIX live now 24 hours a day. So I'd imagine that's going to be, they do that with most of the, they do that with the commodities, and the futures, but they don't do it in the equities. Now they're talking about doing it in the equities. That would be very interesting. So you can see here, this is just underneath by the hair of its chinny chin, and that is a thin as a hair. Can you imagine that? It's 0.0073. You see plot 4 is shifting there at 7.2. You can see plot 1 is minus 36 with 4 zeros in front of it. And so it's right on the edge. Right on the edge there. On the atomic level. All right, now we zip over to the cable. You can see cable's been just rolling over. It seems like that's the Commonwealth at the moment. The Commonwealth overall seem to be selling down. And then you can see here, we're in a weekly sell for, what is that, going on a 4th week after today. Obviously, it's not making any move towards the week buy, and it's been in a daily sell. See, went in a daily sell there last 2 days, right there. So we're going on a 3rd day down. So it's been a winner chicken dinner. All right, zipping the doodah over to, we go to the Turkish lira right there, and you can see it's trying to lift up. We're getting that buy again, but look at our weekly. The weekly is still in a minus. The white line is hanging on my minus side of the time manifold, the nonlinear time manifold. So we're not anti-Newton. We just don't follow Newtonian time, classic old-fashioned time. These time manifolds measure a time reference, Doc's time reference there, and then and at the same time a standard deviation of the volatility or the beta of it all. And so you can see here Turkish lira trying to lift up. It is in the daily buy at the moment, which is pretty cool. And we would love to see this thing get back into the weekly and go up and challenge that dotted line that we think is going to, where it's going to run to. All right, now we go from there to the Canadian. You can see the Canadian is pretty much unchanged, trying to push itself into a sell. As a matter of fact, it's through the sell at the moment. Let's give it a refresh. Where is that? We'll just do it with the keyboard. There we are. And there's the refresh. And so we're just underneath the 0 line. Let's put that in there like so. And we'll see how they play that out. We've been in the weekly sell now for 2, 4, 6, 8. This will be the 9th week. You can see the same thing on the fact check spreadsheet at line 20. Or 8 weeks, I guess it is there. Do we have that wrong? Let's double check that again. So that's 1, 2, 3, 4, 5, 6, 7, 8. Okay, this will be the 9th week, right? So you can see it says 8 weeks on there. And we were 3 days in a buy, and you can see now we're flirting with the daily sell. And if it closes in that daily sell, obviously it's meaning that it's going to pick up some strength in the sense of the Canadian versus the dollar, and it means to be short. Don't be long. Okay, now let's jump over to, we go to the NASCAD, and at the same time, what it's trying to tell us today is that the crude oil is sideways. That's the way it looks to me. That's how I'm interpreting it. And, let me go over to other screen and take a look and see. Where is crude? Crude is down for the day. Down about 27 cents. We got to switch that out, too. We're going to switch over to the June contract. I think we're in the May now, right? And the crude, let's just double check that. Oh, let's do this first. Let's take a look at NASCAD, and then we'll jump over to there. Remember, traders, don't be scared. You're allowed to ask any questions. Cheaper by the dozen. And multiple questions are fine. You can see here NASCAD breaking down. So I guess that's the logic. Sideways to down with the NASCAD, and sideways with the Canadian. So, yeah, I can see 27 cents. That makes plenty of sense there. And then we take a look at it. We go over to the crude oil, and right there. So yesterday we threw that in there because that tried to get into a buy. It's trying to get into the buy there, but it's down for the day. You can see it's minus, and but you can see right here. You can do the quick little circle line, or let's do the square, since it's you can see right there. Both of those are trying to get through the 0 line. They are through the 0 line. Matter of fact, what we'll do is go like that, and we will change the color to, there we are. So you can see there both, and we widen that, and you'll be able to see that it's trying. The problem is that its volatility right there. You can see both are through the zero line, and the green line is through the zero line. Problem is that we've got a red and green and another day of a red and green. That's why we don't confirm it into a daily buy solely for those particular reasons. Now, if this was a green and it was above yesterday's close, we would be confirming it into the daily buy. And you can see here, that's why we had the line there reminding us that it has the potential to go into the daily buy. It's just not doing it. At the same time, let's go to the fact check spreadsheet. You can see after 18 weeks in a weekly buy, it is flirting with the weekly sell with no problem all week long. So if you took the short here, it was a winner, but it was definitely, irritating. You made money out of it, but it was awful tough. And at the same time, you can see we've been in a weekly buy in this product since November. Was that November 27th? Ooh, let's not do that. Whatever that was. So there is November 27th. It's been in a weekly sell. So, I'm sorry, weekly buy. So you can see we've gone from the 46 area. So oil has run from the 46 area in our weekly signal all the way up to the 66 area, 67 area, something like that. There's a 66. So the 66 area. So it was a $20 move, or what is that, like a 50% move on upside. So this is the first time we've seen it flirt with the weekly sell that aggressively since November. So obviously now we'll be putting in at the close of today, if it settles here, we'll be having one of these things. And it will be like so. No, wrong color there. There we are. And that will be the answer to that. It'll go into a sell. All right. Where are we at? And it seems kind of quiet today. I guess it's a TGIF. Everybody's kind of thinking about how to get out of the office, get out of the work for the day, make a run for the border. Well, actually, you don't want to run for the border. Things are kind of weird down at the border. But, that is the thing there. I saw a posting about what they did about pulling the All-Star game out of Atlanta. And now the bigger question. Here's a big question that people have not heard before until I saw this morning. And that is, the big question is does that mean Pete Rose is allowed to be in the Hall of Fame since they support cheating? So, the law is a really good law. And, it makes it very hard for people to cheat. And they like to call that Jim Crow or something like that. I don't know. They call it something illogical. But in the end result is that the law in Georgia is a very fair law, better than New York State law, better than Colorado law. Why they pretend that it's not is because they're a bunch of criminals, I guess. So now I guess Pete Rose will be justifiable to go into the Hall of Fame because Major League Baseball supports cheating because they want cheating. I guess that's what it comes down to. I love that answer. I thought that was brilliant. Somebody sent that over. I thought that was totally brilliant. So anyway, for those that do know who Pete Rose is, he's one of the greatest baseball players of all time, broken all kinds of records, but he was a manager and he liked to bet on his own games to make extra money. And he was a gambler. And so he didn't bet against his team. He always bet with his team to try and make extra money. And so they wouldn't allow him when he retired to go into the Hall of Fame. So that's what that's all about. Let's jump over to. Imagine Bobby Best was not allowed to be in the Hall of Fame of English soccer or something like that. Pele was not allowed to be in the Hall of Fame of world, soccer or in football and in South American football. That's pretty much what it comes down to. All right, now let's drift back over to the currencies. Oh no, what we do is we'll run through the quick energies. So there's natural gas. You see it's trying to lift. We're getting some lift here. Our weekly, you can see, is still down. The green line is showing that it's not moving through the time manifold at all. So there's no real buying going in on a weekly trend. So that weekly trend that we've had since the 290s back in February, has driven it down, and you can see it's downwardly slope. But, overall, you get your little buys here and there, like this one. It tells you it's not to be short anymore. And sure enough, it goes from the high 240s up to the high or mid 260s. Keeps you safe. That's what Doc's quantitative analysis does. It keeps you safe. Keeps you out of harm's way pretty much all the time, except for we can say now, one time, Turkish lira. That was pretty wild. After 40 years, we finally found something that's having a hard battle to go against, deal with the math. And the math has read it so well, the Turkish lira, for so many years. But that political move definitely flipped it out, that's for sure. All right. Let's take a look at the gas oil, as they call it, that in Europe. But what we're really looking at is, where is that? RoboGas. We'll have to switch that over to May too, June. And that's RoboGas is the May contract getting ready to expire. There it is, moving along live. We can widen that out. You can see it's trying to flirt with a daily buy, but at the same time, we've got a red dot and it's down for the day, matching the crude oil. But we've been in a weekly buy in that product since also November or December or something. There it is. It's been in December since in the low 140s. The gallon of gasoline in the United States has moved up to the 220s. Now that's before it goes to the gas station. It's just coming out of the refinery. So you got taxes like 60, 70 cents. That's why you see gas trading at the gas pump at 280, 290, that type of thing. All right, and that's a look at our energy sector. So now what we do is we drift back to the Forex, and we go take a look at the ruble. To start off with, you can see the ruble popping up again. What did Mr. Biden know, and when did he know it? That's what we want to know. And please don't wrestle with the bear. Leave the bear alone. This man is basically criminal. He blackmailed the Ukraine government before, and he tried to overthrow with Mr. Obama and Mrs. Clinton, Mr. Putin. So please, now as president, don't get us in a shooting war, because we're not real happy about the idea of you starting a mess that you created. And then we drift over to the yen. You can see the yen popping up like the dollar right there, yen. And we've been in a weekly buy there. What's that say on the fact check spreadsheet? That is line, where's it at? Right there, line 19. So we've been 13 weeks in a weekly buy, but we're 4 days in a sell. So our math picked up the selling starting here. There it is. And they sold it down, and the dollar sold down and so forth. But overall, it's been a fun ride on the upside since here. We went into a weekly buy, and what happened was the white line went to the plus side. The histogram went into the plus side of the zero line. Let's widen it out. There we go. And then we went into the buy, and then sure enough, every time we went into a daily buy, you could buy the product. See, like here, winner, winner, chicken dinner. See, that one, how did that work out? That shouldn't be there, should it? No, it's a red. So that's supposed to be a red. And then it went back into the buy here, and it was just a simple win for a day or two. Then got out again. And then we had another one here, a simple buy right here, which was a bigger winner, winner, chicken dinner. And it got you out here, if you're following through it with options and so forth, or binaries. And now we are flirting with the daily buy again, with it in a weekly buy right there. So we'll see how the yen marches along. Now we'll drift over to the Mexican peso right there. And peso's been in a sell since here and a weekly sell since here. So again, winner, 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 chicken dinner. And that's how the whole system works here. It's a very visual, very clear, delineated, you're long or you're short by following the dots. And you can see here it's flirting with that buy just now. Just happened. Let's do that. Let's do a control R. Something's going on there. It's trying to move up a little bit, isn't it? Oh, the green dot is gone again. So you're seeing it live and dynamic. And right now the Look at that. Oh, see how plot 1 just went from 0.000. Now it's gone to minus 22. Now we've just jumped to minus 24 in plot 1. And so it's moving in the negative. There's 21. See how it's changing on the gas line 3 box there that I'm highlighting. Now it's 16. And I guess if it gets back to 0, it'll probably give us a green dot telling us that some, oh, look at that, drop to 28. Fascinating, just fascinating. Doc loves staring at his math. He just finds it totally fascinating. There's so much insight, so much knowledge or information, so much information in the math. It's fascinating. It's a consciousness, total consciousness, and it blows my mind. All right, and then, oh, let's do the zloty. There's the zloty. There's the Polish currency. We watch that a lot. Poland is really doing some wonderful things on the continent, practicing good, solid capitalism. You can see here it's trying to push back into the sell. Looks like this week will be a weekly sell right there. Let's change that color to pinkish, like so, and plot there. There we go. And so you can see here we are getting ready to move into the weekly sell. We can throw that little line up in there. So I see that at the close of this evening when we send them out to the Chicago quant clients. There we are. And you know, this is one of the best currencies in Europe, in the world. Forget Europe. I mean, it's only locked between 4.4 and 4.6 or 7, you know, for months upon months, year. Look at that. What a healthy product. You know, boy, you're a manufacturer or an importer in Poland. You have a stability of currency, which is really nice to have. You really want that stability there. All right, now let's drift over to, where we go? Anybody have any particular currency that they would like to see? And if not, we'll just jump back over to, from here we go to the metals, because the metals are used as a synthetic or a derivative of the dollar. So let's see what I guess gold is down, right? So the dollar is up. If the dollar is up, the metals are down. They use it to sell. So in other words, if you're buying a pairs trade and you don't have any leeway in the position of how much you need to sell, in other words, you need to sell X amount, and if you do that, you might get labeled as a manipulator. So what they've done, not the Federal Reserve, the U.S. Treasury Department has a rule of what they consider a manipulator. You know, in my day, it was just traders trading. You know, goes up or down because there's more buyers than sellers, or more sellers than buyers. That was what it came down to. But in these times, they do this measurement of manipulation, which is very strange. So if you can't sell dollars because there's no room to, or you'll get labeled a manipulator, you go and you sell a dollar-denominated product and go hedge it with options. So you're hedging the underlying product, but you're short the dollar through a surrogate, and that's what goes on there. So let's jump over to the metals complex and take a look at it. And there is gold right there. You see there's pressure on that, and it's trying to, I could have sworn I put a little red line up there like that. There we are. And you can see the pressure on that. And then you can see over on the silver, same situation, pressure. But it's flirting with its weekly buy, which is very curious in its own right. I think Robin said he saw some dots developing in his math that is trying to tell us that there might be some buying going on. So that would make sense to me. Let's see, there it is. Let's do the reload there just to clean it up a little bit. So you can see that pressure today. And at the same time, we have a weekly. So fascinating, you know, which we would want. If we get into a weekly buy, we would love a daily sell, because what we wanted to do is go down. Remember, traders, buy low, sell high, not buy high and hope it goes higher. That's our thrust as an old trader. So we want it to go down to give us a chance. You know, we always say that too. If it's going to go up, they'll take it down first. And if it's going to go down, they'll take it up first. They'll take it up so they can short it. They'll take it down so they can buy it. And whoever they are is, you know, the institutions and the central banks and whoever else is out there controlling the marketplace at this point. So that's where we're at. So this will be cool if we get into a weekly buy and then a daily sell, and then we come in Monday, Tuesday, or somewhere around Wednesday, get into a daily buy. Then it's like, okay, you know, let's get long those puppies. I'll get a binary on, a binary spread. All right, now let's drift over to copper. Copper doing an interesting thing, flirting with the weekly sell. I'm sorry, daily sell, because it's in a weekly sell for the last couple of days since the, or a couple of weeks. I'm sorry, since the 404, 405 area, and it fell down to the 398 area, and then we went into a daily buy. I guess it was right. Where was it? That was a daily buy there. This was a daily buy still. And so it went into the daily buy here, but you couldn't take the short, and you can't. And now we're starting to flirt with a short. So if we get into the sell here, maybe they're going to drive it down to the lows of here or there, make a challenge. And you can do it solely because we are in a weekly sell, as you can see right there. Let's widen that up. See, we're in a weekly sell for the last couple of weeks since this area in here, all that area right there, that put us into the weekly sell. And then it broke, and then they popped it. I'm not even sure what that gap is all about. Maybe Robin wrote an article about the armatures and how much a necessity there is for copper. Boom, they popped it. They saw that and they said, oh, Robin says buy. Mr. Big says to buy. Duke and Duke say to buy. That's right. Now let's drift over to the last of the metals complex that we stare at. That is the platinum contract. And what we're going to do is over here on J4X, we'll throw up the... We didn't really look at too much J4X today. Yeah, you can see that here, trying to turn up here on that Swissy. This is the Hinky Ashy, so it's lagging there. But the differential thing is pretty interesting. It's starting to make a turn there. Now let's jump over to gold. And see it trading at 1736. You can see platinum trading at 1205. You subtract the 2, that comes out to be 531. So the spread has been bouncing between the 550s and the 490s now for weeks. And we were playing the spread from the $1,000 area, so we're up. What's that? Dropped from $1,000 to $500. So that is a 50% return. So that's been a winner chicken dinner. And you can see we're in the weekly sell here in platinum for weeks here, and it doesn't look like it's going to do anything about turning up at the moment. So I'd imagine we'll see gold do the dip. See, gold is down, what is that, $24? And what is platinum down? Platinum closed at 35, and now it's trading at 03, so that is $32. So platinum's down about $8 more than gold today. All right, and that's our march through the metals. And again, traders, if you care to see something or ask about something, fire away. It is Friday. Remember, traders, there are no dumb questions in trading. There are only long answers or short answers. That's all it comes down to. Because when you're dealing with money, there is never a dumb question. There's only a long answer or a short answer. Now let's drift over to... we usually take a quick look at Bitcoin. Let's see what Bitcoin's doing. And then we'll go through the stock indexes themselves. And there's the Bitcoin April contract. And we'll do a reload. And it slipped into a sell yesterday. So we can put a red line in there. And we're playing with a weekly sell for the first time in 8 weeks. And then, oh yeah, it did it there too. Where's it? There was a sell there. And then that pushed it back into a buy. But we've been in a weekly sell now all week long. Oh no, I'm sorry. We're in a weekly sell from here. Let's put that line in there. We went into a weekly sell last week. We'll widen that out too. No one's asking for Bitcoin at the moment. That's why we're not really paying attention to the chart, keeping it cleaned up. I can always just do this myself and just take a peek. right, and then what do we do? How do we get that up back into the screen? I guess what we do is we go indicator plot 2 is a gas 3 format, and we scale it so we can see it. Screen, there we are. And then we'll do that again too, and widen it even more. So it's through the 0 line. Let's see what's going on here. See if we can adjust that. What happens when I do that again? Yeah, so it's the gas line 3. It's down 500. Wow. I guess that's the size of that product to begin with. And so it's, 2 weeks in a weekly sell now from here, and you can see it's been sliding down, so you can't take any of the longs, you only can take the short. And obviously you're getting squeezed here today on that one, that's for sure. So it's not a winner chicken dinner. Doc can only be right 8.5 out of 10 times. That's the historical success rate. Going back, measuring galaxy expansions, 37 million years, looking at isotopes and atomic particles in the most minute way, 8.5, and following stocks and commodities and currencies gives us an 8.5 return, so out of 10. All right, now from there what we do is we drift over to the stock indices. We're seeing some really wild action here. Let me see if I can show it to you. This is the Nasdaq 100 on Dukascopy. I'll put it up on Dukascopy. They call that the Tech 100 right there. You see here, we are down for the day 88 points. We were up 120 points last night when I got back from dinner, and that's been very interesting. They've been selling down the tech stocks, but at the same time, let's go back. Right there is the S&P 500. This one right here, you can see it's sold down from last night, but still holding up a little bit here. Oh no, it's down now. When we started this webinar, this thing was up, and the other was down. You can see here our math on an intraday basis, on a short-term basis, went into the sell here, and you can see all the weakness. And there's a buy right there, but you can't take it because it's a red dot, and then it rolls over again, and now we are flirting there. Now on a more short-term basis, remember at one time we used to do this. We used to put currencies up there on the camera instead of charts. I mean, we did charts, and instead of my face up on there, we would do charts, a live chart for people to be able to trade using our math for an hour. And you can see here it goes into the plus side. We get a green dot there, and it goes up in value, and then vice versa. Drops to the minus side right here, and it goes down in value. That's the way that goes there. But we're seeing some selling here this morning, and what's interesting is that the markets were up very strong yesterday, at the close of the day, and then they ran them incredibly strong last night. That's the fascinating thing. Let me see if I can show you one of those. Let's go into, here's the Nasdaq. Let me scrunch it up from last night, from the close. There was the close of yesterday. Let's see, where is it at? 4 o'clock or 1500 UTC time. Basically 4 o'clock Eastern Standard Time. So it goes and takes off last night. I mean, that's a massive move. It's a 100-point move on the Nasdaq, and then it collapses. And then you go into the London, Swiss opening here, and Frankfurt Open, and Madrid, the European Open basically, and it, goes all the way up until here. I mean, it's already in the minuses from yesterday, but then they fail, and now we're breaking down and falling as much as we went up last night. Oop, right here, and that's fascinating. So, oop, what we got there? Ooh, I think I need to mention that too. And so that is fascinating there at the moment to see this action going on in the stock indices. And then that's the Nasdaq 100, and here is the S&P. Yeah, I am. I just wanted to answer you back. We're running late. I forgot I got that Zoom interview, so I won't be over to your place until noon. Yeah, I know. It's TGIF. I hear you. All right, I'll talk to you later. So, that is the the action we're seeing, and we're seeing the same thing in the S&P 500, and that's right. Same situation at 15 UTC, or 4 o'clock Eastern Standard Time. You had this beautiful run, and that's a big move. You're talking about going from. Let's see, let me move this over. You're talking about running from the 486 area up to the 4102 area, all-time highs, and then they've just puked. They've just rolled over. That's a floor trader expression. Puked. They went down, and so that's exactly what's going on here. It's very interesting, and it's just made a low in there, in the minus. So they're let's see what the stock indices. I'm sorry, not the stock indices. Let's take a peek at, let's see, doing my James Kirk interpretation. There's the 10-year. 10-year is being sold down. That must, whatever did that, let me go see if I can see what news did that. Whatever did that, obviously has put a chill into the whole marketplace. That's what we're seeing here. We're seeing that chill that's going into the whole marketplace. U.S. bonds being sold down, dollar being bought, which is, we always shake our head at that one. In other words, if America is the blame, it's epicenter of this, whatever it is going on, and it's in the U.S., why do they buy our dollar? And then what the next thing they'll do is they'll go buy our bonds. And it's like, wait a minute, aren't we the problem? How do you buy that stuff? And let's see if we can find a headline in here. Big Brother mandates Brits at pubs. No, that's not it. After unprecedented delay, Bureau of Labor Statistics admits huge jump in producer prices in March. Okay, that's what the pressure is. Okay. Stocks and bonds sink as BLS, or Bureau of Labor Statistics, website crash sparks inflation anxiety. All right, we got 2 articles now kicking out really strong. How to participate in the next oil. Oh, no, not that. U.S. adds China's supercomputer companies to trade blacklist. Macro risks the stock market are mounting. Yeah, I guess we're having a little weakness in here from all that noise. So that's exactly what's happening. And so I guess inflation is starting to rear its head. But the problem is you got quantitative easing going on, so it's awful hard to take any of this serious because we know that the central banks will protect us in the end. I mean, that's pretty much the name of the game. So, they're buyers of last resort. They are, they are so involved in our market every day now, aggressively, that it's hard to take, what we used to call it, the Fed put, P-U-T, in other words, an options put. We look at it as, they are the put. They will turn markets around for us. In other words, buy low, sell high. If they slam the stock market, jump in there and buy, because, just don't overbuy to the point where you get margined out. You do it through derivatives or do it through, anything else you want to try to do it through, but do it through low risk. And that's exactly, that's what the issue is all about. That's what the old heads are shaking their head at from the financial markets. They can't believe we're seeing this happen. There was forever, when I started in the markets in the 70s, late 70s, going into 80, there was a fear that people would lose confidence in the dollar and the Federal Reserve. And they fought very hard to not have them influence the markets in an openly way, more than just draining a system or loading a system up on a quarterly basis. In other words, repos and things like that, where they were lending money to the banks versus draining the banks. That was the repo side of it. That's what they called it, repurchasing. They would go into a bank and they would say, okay, look, we're going to buy bonds from you. Here's cash. Then you could take that cash and go lend it to John and Mary to go buy a house. Or you could take that cash and lend it to Billy Bob to buy a backhoe to start his construction company. Or you could lend it to, Mike to open up a pizza joint or something like that. And it was that. And then when they thought that the economy was overheating, they would come in and they would sell the banks bonds again to sop up the spare cash. And they did that on a quarterly basis or half a year basis. Now we do that every day. They're doing that. Can you imagine that? Every day. Intraday they're doing it. They're not just doing it at the end of the day. They're doing it throughout the market day itself. It is phenomenal to see this, as an old trader, and a veteran of the marketplace, and being on. I've been on every level from a runner on the floor to a member of an exchange. I've been a member of all the major exchanges, to being a wonderkin rocket scientist for one of the major hedge funds in the world. It's just so odd to see this. It is. You just cannot appreciate sometimes how much I get a stiff neck just turning my head looking, going, oh my God, what is that? All right, me done dramatizing, Mr. Drama Queen here, or Drama King, whatever you want to call me, or Drama Prince. All right, anything out there anybody want to see? If not, we will jump over to, let's see, where are we in this sector at the moment? That is the bond, the 10-year note or bond. That's where we divide our notes versus bonds. The title, it's the same thing. It's an interest-bearing product, and it's a government product. So that's where we are. And you can see at the same time, flirting with that weekly buy. So if this goes up, what that says is interest rates are going down. So this here is from the BLS, which is the Bureau of Labor Statistics. It gives us all those stats that everybody chases every day. And they're freaking them out. And they've got, matter of fact, I think I'll put that up on the screen and show you. The two headlines of two different articles really jumped out at me enormously quick. And that is, let me see if I'm going to find it right here. Let me just do this. There it is. And then let's go over and find it. Paper. And this is off of the Zero Hedge. Something we can trust a lot. Let's see. So I'm going to shrink that down so you can see it better. Okay, and here it comes. And where'd that go? There it is right there. And so there's the article right there. Unprecedented delay by Bureau of Labor Statistics admits huge jump in the producer price. This represents inflation traders. That's what this has people scared about. Then another article 7 minutes beforehand, stocks and bonds sink as BLS website crash sparks inflation anxiety. So, ouch. Like, ouch, something we don't want to see. We don't see extreme inflation. We definitely don't want to see that. And so that's what the bond dropped for right there. All right. Let's see. We just looked at the S&P 500. Here's on a daily basis. You can see it's moving down, but not challenging the weekly. Why? Because the central banks are holding these products up even with all the selling. And we're in a weekly buy, and we're going to end the week in a weekly buy. And if this thing even, like, matter of fact, there's the settlement last night at all-time highs at 4.098. And today it got up to 4.10250. And all-time high, and now they've moved off, and we're only trading at 85. So what's that? 13 points underneath, nothing major. And then you can see same thing going on the daily. That's the S&P. Nasdaq went and flirted with the weekly all-time high almost. You see there the high today was 841, almost 842, and the all-time high is right there on February 16th of 13,850. And where did this get to? 41, was it? Yeah, 41. So it just missed it by 8 points of touching the all-time high. And you can see this also hanging in the weekly buy. It's not letting go, that's for sure. It's staying very firm. The buyers, be it the central banks, being the buyers of last resort, are stepping up and making sure that things just stay chill. Things don't move out of the range. Dow Jones Industrial Average is almost yawning at it. It's still almost plus for the day. Last night it settled at 33,455. See that there on the C? See if I can. I don't think I can do another. Can I do another mouse at the same time? I think I can. No, it interferes with it. Okay. Yeah. So it closed at 33,455, and right now it's trading at 33,370. I'm sorry, 33,004. Was that 446 versus 455? It's down $9. That's it. Just a simple $9. The Dow Jones Industrial Average is holding up very strong, flirting with all-time highs again, like the other two stock indices, and not through them obviously at the moment. Whereas before the webinar started, they were through all-time highs, and that's the action of today. What a way to end the week, you know. It's turning into a fascinating one. That's the best way of all of looking at it, really. Let's see now. What else can we show you here on the stock? Oh, let's do this. We'll jump over to the Russell 2000, which is playing the part of the old Nasdaq before Nasdaq had all the multi-trillion-dollar or multi-billion-dollar companies that are, even a few of them are trillion-dollar companies. You know, at one time Nasdaq had weaker companies that were speculative companies. Now the Nasdaq has, you know, Apple, largest company in the world, and it has Microsoft, one of the largest companies in the world, and it has Tesla, one of the largest companies in the world, Amazon, one of the largest companies in the world, Google, one of the largest companies in the world. You know, it's definitely out dominating all the rest. You can see here the Russell is having its issues. There's the all-time high right there on March 12th. You can see it's not. It 4 days or 5 days ago, it was making a dash towards that. You can see we've been in a weekly sell for 2 weeks now. This will be the second week. Oh, wait a minute. No. We're only flirting with it. That's what it is. And we can get rid of that right there. You can see we're using a gas line 3.5 here. So let's turn it back on again. So that is the plot 6 we're following on it. Let me just show you indicator. So the 3.5, the style, you can see there, the histogram is the plot 6. That is the 5 of the 3.5 super. And then we're following the plot 1 of the 3. So what we're seeing here is that the 1 is jumping into a weekly buy last week, but we're not getting, this is a really wild beta. So, you know, we use a 3.5 to smooth it out. And you can see here, you know, this is our proprietary derivative, quantitative derivative, and you can see here, you know, it's not allowing it to put us into a buy. Even when we went into the buy here, we knew not to be short. Oh no, okay, it does put us into the buy because we are in a buy. So there's your buy. So you can be long this, but you can't be short here. That's what it comes down to. Because even when it went into a daily sell here, as you can see, it's higher now, flirting with the daily buy. Not yet. No, I just refreshed it. Okay, so it's just doing all this weakness in here, and you can't be long, even with us in a weekly buy from here, solely because the 3.5 is telling us that it's not confident in its, I guess, its prediction. It's not confident in its prediction, telling us that you should be long, right there at the moment. So you know, it's just telling us to stand to the side because that's where it went into the sell. Put that up there. Actually, it should be down here. It should be right there. And so went into the buy here, and we're in a weekly buy. Even with the I guess which one is it? I think this is the one. Even with plot 1 minus, plot 6 was plus. That's what the histogram is, the plot 6. So it was saying to us, you know, just like it did here. It put us into the sell here in a weekly buy. You couldn't be long throughout that slide. You had to stand and watch it. It's the way the math works. You know, it's a consciousness. It's a mathematical consciousness. It's fascinating. And so it's a topological, you know, reading of spatial movement. Fascinating. Kind of like that Al Einstein thing. It's measuring a object on a field, just like his work measured a electromagnetic object or a moving object on an electromagnetic field. He was following Maxwell. My work is following a combination of Maxwell and Einstein. I invented this to fight the Higgs boson back in '77 when I was a wonderful foreign student at Hatfield Polytechnic in good old England. Jolly England. Speaking of which, I believe the Queen has lost her husband. We say sorry for that. And 99, not bad. Live to be 99, who can complain? So that's the action we're seeing there. On the Russell, it's having a problem. The lower cap stocks are having problems, but notice it's basically in a trading range. And that trading range is flirting constantly with the move more on the upside. You can see here, it was this whole move up. Let's scrunch that up. You can see that whole move here from there was the weekly buy. So the product went from the 18s up to the 20, almost 24. Right there, 23.58 was the high. So that was like a 25% move, a 30% move even. Like a 30% move. That was an incredible move for just 3 months. The math picked it up on the weekly signal, and then the dailies kept you safe when you use the daily and the weekly in a coherent fashion together. And then money management from there makes it even better if you're using option spreads versus hard delta, so forth and so on. All right, traders, everybody have a safe and smart weekend. We will catch you on TGIM. Thank goodness it's Monday. And so this is Doc, the singing trader. Happy trails to you until we meet again, which will be Monday. Happy trails to you, to all our trading friends. Ta-ta for now.